I hate them as well. Okay, we both agree that these vertical moves are no good and their failure rate is very, very high. Now, how far will that vertical move go? Well, that's the question you have to answer. I think you have to be ready for it, and how you handle it is essentially just take a channel or a trend line and just kind of move it over a little bit. Okay. Then call that your line in the sand. And if the stock crosses that line, then you take on some bearish strategies, buy puts, sell calls, do verticals or diagonals or whatever to the downside. So be very careful if you're going to pull the bullish trigger right now. I would wait and look for confirmation because there is still a lot of room to the upside. I mean, if the Dow or the diamonds, as an example, since we're on this chart, if it were to pause a little bit right here and gain some acceptance at this current level, all right, we could easily see 355, okay, or 35,500 on the Dow by in a few weeks, really by Christmas. Okay. But we need some follow through. Overall, this is a very thin market. Okay. IWM is an example. The small caps, they are not participating. They participated a little bit, but as you can see, they don't look like the Dow. They don't look like the S&P 500. They don't look like the NASDAQ. The small caps are really lagging behind. And that is the name of the game right now. It's a very narrow market. It is a trader's paradise right now. You really got to pick your spots. So JP, I mean, that's kind of a look at the broader markets. What else, would you like to take a gander at, so to speak? JP, you might be muted there. I don't know. Maybe.
You're absolutely right, sir. Well spotted. Look, we've got a couple of people just asking if you wouldn't mind put the Elliott wave count on the DIA and on the Qs because
Yeah, let's see if I can't
both of
get
those
it.
counts were in I guess peril of perhaps being invalidated. And I know particularly on the Qs, it's particularly close. So
Let me see if I can't get that back
if you just
up.
click the Elliott wave button over there.
Yeah, there we go. Finally, it popped back up. So what we have here is really and again, we're looking at the Qs here. Okay, we have pretty much violated this wave 4 pullback. Okay, this wave count will change. That's not a bad thing. I know a lot of people get frustrated with Elliott wave because the wave counts change. Actually, that's a good thing. When it's recalculating and the software is going through through all of its calculations that are accurate to Elliott wave's own analysis, then you want them to recalculate. And we will, when you get a vertical move like this and then it violates your rules, then you have to kind of sit back. Here's what I do when the Elliott wave count has been violated, okay, and it's not it's really not effective anymore. Is I come over here and I turn it off. Okay, that is the best way to handle when an Elliott wave count gets invalidated and you go into your ABC patterns. Well, that's when you want to use your zigzag. You'll look for your zigzags, look for your Fibonacci retracements and extensions. And then if we look at the diamonds, okay, and let me just pull that back up and we'll throw Elliott wave up here. It is on the verge of that disqualification. It's still a valid wave count. And this is kind of what I was talking about. We're at this area of resistance. If you want to take your random line in the sand, whether it's a moving average or a trend line, either way, just kind of draw something that's what we call offset on the chart. okay, offset from current price. When it crosses that, well, then we can calculate where. So your tap box is down here. The middle of that tap box is about 315. Again, that's on DIA. If we get that downtrend follow through here, that's probably where I might put my next butterfly, my next calendar spread, whatever my trade of choice is. It's really down in that area where I might place something to look for some very nice profits. Again, if finally, if the wave count gets violated and we continue to move higher, then we look to the bullish side.
And Jeff, I think Rob normally moves on and takes a look at bonds. I know he looks at the TNX regularly, but I know you also track IEF, which is the ETF. So maybe we could take a look at both of those.
Sure. So we, if we pull up TNX, what now? This is rates. Okay. Now we know that rates have been rallying higher. Okay. And what's interesting is if I put that Elliott wave count on here, this is what I call a beautiful chart. Okay. This right now is a very valid Elliott wave count. Okay. The 1 to 2, the big long 3, the wave 4 pullback. We pull back about 30% right now. If that holds, then where are we looking for? Well, we're looking for another move higher in interest rates. And that's really not what we want or need to see. I don't know really, based upon what I'm hearing from bond traders and others, really they are looking at, and again, these are active bond traders in the bond pits. Pretty much they're thinking the rates may have stabilized for now. Now, there's lots of things that can change it. So how does that translate? How does that translate to the bonds themselves? Well, as you can see here, this chart is almost totally inverted. Okay. Well, that's the bonds. As bonds go down, interest rates go up. Okay. So if I attach the Elliott wave count, then it would make sense that we're in a fourth wave to the downside on bonds. And if the trend resumes, well, we could see the IEF, which is the 7 to 10 year ETF, 7 to 10 year bond ETF. We could see that moving down. I think $85 would be a very reasonable target for this, but that means interest rates are going to move up into the close to 8, maybe 8.5%. And that is really going to get the attention of the market right there. So that's bonds.
Thanks, Jeff. Could we take a look at energy, USO, perhaps? That's been very topical.
Yeah, I was just going to mention, energy is getting a lot of play right now because of, well, really oil starting to collapse. Now, the reason this is happening, and you'll notice here that I have this pattern on here, this zigzag pattern, and look where we closed today. USO, which is what we're looking at right now, was down over 4% today, gapped down on the day and closed right at the 100% extension on the zigzag pattern. Now, if we break below that, if we break below and close below this, we could easily see a drop down here to the 1.38 to the 1.61, which is 67.5 to $65 mark on USO. If we drop down there, we could definitely see energy prices continue to drop, prices at the pump start to drop. Please don't get confused with anything that politics has nothing to do with this right now. This has everything to do with the economy and potential demand. Demand is waning, and it's being reflected in the energy sector. XLE, which is the Energy Select Sector Spider Fund ETF. Let me clean up my chart here for just a moment. We also gapped down today. We're down over 2%, almost 2.25% today. This move continues to the downside. In fact, I can draw a quick little zigzag pattern here, and we'll see where we are. Look at that. We closed just shy of that 100% extension. In fact, technically, we may have bounced off of it. Okay, right at $83, 83.80 is probably that number. And we could look for further weakness all across the energy sector. It was hot there for a while, but now we're starting to back off. Crude oil is down. West Texas Intermediate is down. Prices are coming down across the complex, JP.
Awesome. Thanks, Jeff. And I'll just mention for everybody who's joining us late, Rob's obviously unavailable today. He's a little ill with COVID, but thanks very much, Jeff, for stepping in. So we're trying to do as best we can, Jeff. And one more thing before we move on to talk about some of the trades, can we take a look at the VIX? I just thought that might be interesting as well.
Yeah, we can look at the VIX and maybe take a look at the dollar real quick. The VIX isn't really telling me anything. I mean, in fact, let me take that Elliott wave count off. Okay, the VIX really isn't telling me anything. It was pushing. What concerned me with the VIX really was about 2 weeks ago when we were trending higher, and it was being very consistent in a kind of a choppy move higher. It was just grinding its way higher. And that was a little bit alarming. But finally, with that news of interest rates dropping just a little bit, bonds rallying, boy, the market loved it, and the VIX just cratered because of it. Now we're trading back below 15. We could be headed back down to 14 or 13, probably back down to some lows, especially if the markets break higher. We'll see the VIX get buried. Okay. And so it's really not telling me anything. It's telling me people are very happy. They're very complacent with what is transpiring right now, and that nothing major is happening on the surface. I think things are percolating just under the surface. That's what still concerns me right now. Now, if we look at the dollar is holding on. It did have a bad day a couple days ago, but the dollar is pretty much shooting sideways right now. It tried to break down on Friday. That was kind of almost scary going into the weekend, but alas, on Monday, it held. Today, it rallied a bit, and look at this. It's about to pop back in to that channel that it has established here, right at that 105 level. And if we can pop back up here, we could see continued strength in the dollar. But we're developing this little flag pattern here, and that could be kind of a bullish sign, but we'll see. So that's the VIX, and that's the dollar.
Jeff, can I ask if you zoom out and put a little data on that and add the Elliott wave?
Yeah.
What does that suggest to you in the scenario of a potential bullish move?
Well, again, it's a pretty, it's almost a very ideal Elliott wave pattern. Okay. And, there's, in fact, there's something that I talk about a lot. I haven't heard Rob talk about it. I don't know if he does. Maybe he does. But it's that rule of alternation in Elliott wave. And that rule of alternation is when wave 2 is simple. And look at this. The move from 1 to 2 is literally just straight down. That means the wave 4 will be complex. Well, you can't get any more complex than what is going on here in this pattern here. This helps validate this wave pattern to me. Okay, it's that rule of alternation. When wave 2 is simple, wave 4 will be complex, and vice versa. When wave 2 is complex, wave 4 will be simple. And that is exactly what's happening here. And we could see the dollar start to rally once again. That would put pressure on the metals. And I know Rob had a trade that we'll talk about here in a little while on gold, but that could put some pressure on the metals if we see a significant rally in the U.S. dollar.
We can probably jump right through to that trade now, because I think we've, it's a good opportunity. I know we're sort of taking it out of order, but given that you're talking about it, let's revisit Rob's case study from the last time that Trade Finder was held, which I think was actually 2 weeks ago, because there wasn't one last week.
Right. Now you can see here, ideally, since I left the Elliott wave on, you see there's no pattern in the Elliott wave. It kind of hit that wave 5. Now it's recalculating. This chart pattern is so ugly that it doesn't even qualify. So we'll take that off. And here is where I think it's right back here. Okay, so Tuesday, October 24th was the last Trade Finder. That's when Rob gave out a trade on GLD, which is what we're looking at now. That trade would have been executed on Wednesday. So right here on this candle, right where my crosshairs are, and I believe they were January calls that were suggested. And I know that as you can see, this market rallied higher, and those calls generated approximately a 50% return just in 3 days. And if you were able to take some profits, maybe after that big run up, and take some profits here on Monday, October 30th, if you were lucky enough to take profits, then congrats, you made some money on a nice trade. If by chance you hung on to those long calls, here's the thing, is the trend has not been broken yet. Even with the gap down today, this is holding. The pattern is holding for now. I would definitely add a stop loss level, to where you draw a line in the sand and say, hey, if it drops below here, I'm out. Because as I mentioned, if the dollar moves higher, that could put pressure on the metals, but that's an if. Okay. The dollar hasn't even broken back into that trading range that I showed you a moment ago. It could fail and drop from here. If the dollar drops, we could see gold and silver, SLV, we could see them both rally, continue the rally. Right now, I'm leaning towards this consolidation up here around this 182 to 185 level as a bullish consolidation. And we could see this definitely moving higher if the environment is right for it. So if you're holding on to those calls, you have plenty of time. It's only obviously the first week in November, and you have plenty of time on those. And if we start moving up, then you could either take some profits or maybe even sell some calls above it, turn it into a vertical spread. That would help offset your risk, maybe lock in some profits, all sorts of things that you could do with that. But that was the trade that Rob gave out 2 weeks ago, and we wanted to be sure that we updated you on kind of what we were thinking at this point with GLD. So, that's, I think this could definitely have a run.
Thank you very much, Jeff. And with that, Rob normally also shares with everybody some of the trades that have happened for subscribers on the eWave platform. Can we take a look at maybe some of the breakout trades that you've been doing? Because I know you've been very, very busy with earnings seasons on that particular strategy.
Right. So as we mentioned at the top of the hour, I focus on delta neutral strategies and opportunities. And one of my systems is really around earnings. And around earnings, there's several things I like to do, but core to what I like to do are straddles and strangles on specifically on stocks that have demonstrated a breakout history around earnings. Okay. A history of volatility around earnings. And there's two types of volatility. Okay. There is stock volatility and there is implied volatility or IV volatility. Okay. And we take advantage of both of those. Let me kind of show you what's been going on. We have a couple of open trades today. We're very active in this portfolio. These top four trades here, PBR, Disney, Upstart, GILD, those all came out yesterday. 4 trades on Monday. One of the 4 we've taken off already on UPST at a very nice little profit, 20% return in one day. Okay. But as we go down the list here, we see lots of wins, a couple, 1 or 2 losses, but most of win, loss, win, loss. That's usually the way it goes. But overall, we're running right now around, I believe it's 78% winners on the portfolio. And let me just pick one. I'll pick FTNT here. This is a trade that we put on October 31st and exited the trade on November 3rd. So we were in there essentially 4 days, or 3 really, but 4 days that we were in this trade. And the entry was a simple straddle. Okay. So you can see here the stock was consolidating. This stock has demonstrated a history of potential breakouts. I should see my debit up here was $560 on the trade. And what we're expecting is the stock to make a big move. Well, just a couple of days later, okay, we exited the trade because the stock went through its earnings announcement. And here is the result. You can see down here, the stock gapped down big. It actually dropped over 22% on the open. At the close, it ended down 18%. Okay. But the stock opened up way down here at the bottom of the graph here. And we put out our order as the stock began to rally. We put out our order, took some profits. Okay, we were able to capture about $300 of profits. That's a 60% return on our investment in just 3 days. Okay, in just 3 days, we were able, and these are the types of stocks. This is a great example of stocks that we look for that have the potential to make big moves around earnings. And so this time of year, when we're getting to be on the backside of the big earnings cycle, but there's still tons of opportunities that we have. This is one of the basic strategies, either this or strangle, that I like to trade. Now, I have something for you if you would like. If you'd like to learn a little bit about how to trade this strategy, I have a little guide. It's a free guide that we can drop the link to this in the chat, but it's ewotrader.com/straddle-guide. And this page will pop right up. And this is a 20-page guide on how I trade this strategy around earnings. Now, here's the thing. Straddles and strangles, before you roll your eyes, keep in mind, this is one of the first types of strategies you learn about when you start trading options. You may have even tried a straddle or strangle, and you most likely, unless you got pretty lucky, you most likely lost money on the trade. And I can tell you why. You picked the wrong stock, or you timed implied volatility wrong. One of the two. I talk about this in the guide. Okay, so feel free and download the guide. It's 20-pager, as I mentioned, lots of good content in there, and I specifically tie it to earnings cycles and earnings events because a lot of volatility happens around that time. But now, as I mentioned, we're kind of on the backside of earnings. So what do we do when there's not earnings and we're trading these breakout trades? Well, this is where the delta neutral income strategy comes into play. JP, can I talk about that for a second? And
yeah, absolutely. I know you and Rob have been talking about income a lot with the fact that earnings are coming to a close for the year and getting set for what you'll do over the holidays and into 2024. So I was actually going to suggest, if you've got a trade that you can give out, because it's Trade Finder, obviously, maybe an income trade.
Yeah, let me pull that up here. Let's just do, this is the trade right here. This is okay. So I've got a trade for you. So for all of you that are still kind of hanging out, this is a trade for our delta neutral income service that we offered, that I sent out today to our subscribers, and I'd like to give it to you all this evening. Let me jump into it here, and I'll show you that this is a simple calendar spread. Okay, and what we are doing is we are buying a longer dated option. So here we have the December 15th expiration, by the way, 35 calls. We're buying those. Okay, and then we're selling the December 1st expiration, 35 calls. Now, interesting, the net debit for that is just $12. Just $12 for a trade, right? So in the publication, I suggested 15 of them, and that made our debit $180. Okay. So at $12 for a one contract trade, we have the ability of making up to $40 in the trade. That's a 331% potential return on risk in the trade. Now, because of how we sized it at 15 contracts for $180, we have the ability to profit around $600. Now, ideally, I don't target that entire reward. So as a subscriber, what you're going to get is my regular commentary and updates, including exit alerts of when we would take this off. And to give you some idea, I'm looking for a certain percentage of that maximum reward is what my target's going to be to take this trade off. So it's unlikely that I'll get anywhere near the $40 per contract, but I'm going to target a certain percentage of that, definitely. And I'll be letting our subscribers know. And if Rob's nice enough, maybe I can come back and update everybody here in a couple of weeks on how this trade goes. But that is the trade that I'd like to give you guys. It's not on the breakout side, it's on the income side, because we do these on, like clockwork. We just do a lot of these on a regular basis, and it just generates what I call singles and doubles, singles and doubles, singles and doubles. And we're just kind of hit on a consistent basis and making that very consistent return. Now, along with this, I do have another guide that talks about this income strategy and actually some of the very basic rules behind it. That guide is available at ewotrader.com/7 golden rules, I believe, or 7 rules /7 rules is the link. Okay, so ewotrader.com/7 rules. And that publication is chock full with just basic, well, again, 7 basic golden rules that we follow when we're trying to generate income when trading options. So feel free and download that guide as well. So I got 2 free gifts and a trade for you tonight, JP. How about that? 2 free gifts and a trade.
Awesome. I know you and Rob worked on this guide. I think this is the first time it's getting an airing. Anybody's seeing it at all. So that's one that both Rob and Jeff had input into.
Yep.
There's a couple of people who would, I dropped those links into the chat, and there's a couple of people that were just saying that they were having some problems. So I've reposted them there. Please let me know if there's still a problem. I've tested them. They seem to be working, but yeah, let me know if there's any difficulty, and I'll take down your details and make sure we send them out. The other thing I was going to mention, we had a few people asking earlier, what was this software that you were using? And I just let people know that this is the web version of the Hub software that Rob uses. It's in beta test at the moment, but that beta is open. So if you go to the website and register, you'll be able to get access to the software that Jeff's using, including the Elliott Wave and including real-time streaming US data. So worthwhile doing that while it's in beta, because you can basically get it for free at the moment. Jeff,
yeah.
Rob normally does Q&A. We've still got another 20 odd minutes. So are you ready to take a bit of Q&A?
Absolutely. Would love to.
All right. Well, the first one that I'm going to throw at you, we've already covered a couple of them, but is coin. Could you have a look at coin?
Sure. Let's just pull up Coinbase here. And, you know, all of crypto, well, Bitcoin and others have been rallying a little bit. Rob and I have talked about this. We were talking about this basing action, okay, this level of acceptance. The longer a stock or any instrument maintains at a certain level, it becomes an area of acceptance. Like this is a normal price. Well, in this case, it's built up as support, and Coinbase, as an example, broke out and is starting its run higher here, along with the rest of the group. Now, this breakout is because of earnings, and I was just pulling up here. They had earnings on November 2nd, and the numbers look good. I mean, they had a surprise of 3.56%. So they were above their estimates by 3.56% in a good surprise. The stock reacted positively to it, and off we go. Now, here's the thing. Look closely here at this wick right here. This is very minor resistance. And if I drew a line across, okay, obviously there's price resistance back here, but as you can see, we had an open and a close. Well, we bounced off of it with a wick. We had an open, and then we had a close, and then we've tested this area. So I would call this minor to intermediate resistance right here at 89. If we break this level to the upside, you could definitely see 110 being challenged again on this. That is a nice move. You could definitely see 100. If the stock breaks 90, starts getting up to 91, 92, it will gravitate towards that big round number of 100. I'd be very comfortable calling 100. I'd be more aggressive calling 110 as the target if we can close above $90 on Coinbase.
Awesome. Thanks, Jeff. Next code that I'm going to give you, I'm just taking a look over here on some of the other social media platforms. Let's take a look at, well, we've covered a couple of these ones already. Okay, I'm going to come back over here and let's have a look at Tesla, please. Can we have a look at Tesla, and then
sure.
maybe we'll move on to Netflix after that.
Okay. All right. You know, Tesla is one of those interesting interesting stocks. It was really, let's go back a little ways. It really got beaten down, and then boy, did it catch a bid, and it rallied up, consolidated, and then the big push up to almost, well, it touched 300 before falling off. Let's see if we can get a little bit of data in here. There is no Elliott wave pattern current on here. So here's the thing. I threw a couple of moving averages on. Okay. My short-term moving average is a 21 period moving average. That's the red line. Okay. And my long-term moving average is called the 161, the 161 period moving average. Okay. Notice that they are converging right here on Tesla. The stock has rallied up where? Well, right to these moving averages. Okay. They are notoriously accurate on many stocks. And it looks like Tesla is reacting to it a bit. Right now, the trend is weak to down. If 225 holds here and we start to roll over, not only would I think 200 would be tested once again, okay, which is $20 away, we may even see 175 in the future. This is where I was talking about the markets being very thin right now, that not everybody is participating in the rally that we just had. Obviously, Tesla moved up a little bit, but the overall trend is down. I'd be very careful with Tesla. I would hedge it if you own the stock, collar it, buy, put, sell, call, collar the stock. Okay. If you don't own it, this might be a decent time to buy, but I'd be very careful going long here on Tesla in the near future. It's got to break above these moving averages to probably target 275. If it broke above these moving averages here, and is where it would go to the bullish side.
Jeff, I know you're a Heikin-Ashi guy as well. Could we have a look at a Heikin-Ashi chart on Tesla, and does that tell give you anything different?
So yeah, well, what Heikin-Ashi is telling us right now is that up until yesterday, okay, we were in a very short-term bullish trend. You'll notice these almost three candles here that had no wicks on the bottom, and they're colored green. The opposite happens on a downtrend. You get these really strong red candles that have no wicks on the top. And then look what happens near a trend that's about to end. We get what I like to call wicky. Okay, we get wicks on the tops and the bottoms, and lots of wicks here, and then you get this one candle of indecision before a rally, and now we have another candle, small body wick on the top and the bottom. This is why I think we might be giving up this little rally on Tesla and could be headed towards the downside. This could change tomorrow. We could get a nice big green candle, but just my experience tells me when we get these, I mean, you have a similar red candle up here before a big drop. It's one of those things where I'd just be very careful when this is almost a good place for a straddle if there was a catalyst for a big potential move, but I don't know that there is.
Awesome. Thanks, Jeff. And what about Netflix? Could we take a look at Netflix, please?
Sure. Let me pull up Netflix. Oops. All right. You notice when been doing this a while, we don't need symbols very often. A few stocks I might need the symbol on, but not very many. Boy, Netflix had a surprise, didn't they, around their earnings event. Let's see when that, I believe that was, what were their numbers? Well, they had a small surprise on earnings, up 6%, almost 7% on earnings. It was a nice surprise. And boy, the stock popped and now it's rallying higher. And kind of the same thing. We're getting up here to this area of resistance. If I put up Heiken SE here, it's going to tell me that this trend is pretty strong. And look at that, it is. You'll see these candles have no wicks on the bottom of them. So if you're in Netflix, this is a good place to be right now. It's definitely a hold. I would be rolling up your stops if you're using stops. I'd be rolling up your puts if you're hedging with puts, and you own the stock. Okay. We're just looking for that next area of resistance, which is up here at 446 to 450. Now it's at 434 right now. It could definitely get up there to this previous pivot right here. And then its next target would be that 475 level there. So the trend is strong right now on Netflix. And if you're in it, stick with it. I think it's got a little ways to go.
Awesome. Thanks very much, Jeff. The next question is one from Robert. He's asking if we could take a look at Target, TGT.
Yep. We sure can. Now, Target has been under fire here for a while. Okay. They made some decisions to target a certain audience, which quite honestly is not a large audience. And that turned some people off, and the stock has been punished for it, going from 180 down to literally 103 in 9 months. I mean, that is a move. And now we're consolidating down here around the 110 level. Target, let's see here, has earnings. They have earnings coming up on the 15th of November.
Jeff, just to jump in there, I noticed that if you turn the Elliott wave on, it looks like a possible completed 5-wave pattern. Does that look to you done, or is it likely to push down a little further, perhaps?
Boy, if it pushed down any further, it'd be to 100. Ironic that the middle of the tap is at a big round number at $100. Okay. I mean, you can't make this stuff up. I could definitely see, I'd have to measure that out on that, kind of percentage move and what the options are being priced at going into earnings. I would not be surprised if we did not gap down into that tap box on earnings. I would not be surprised at all. Now, Target has made some steps to rebrand is not the right. I don't think that's the right term, but they've made some steps to kind of retarget, for lack of a better word. And we'll see if that's paying off. This stock usually isn't on my radar as far as breakout trades, but it's definitely one where I would do my math and see if this would be an opportunity. It has not been coming up in my research, but stocks that are in this area where they've been under fire, there's outside of factors that are affecting the stock. I like to look at these every now and then and possibly do something with it. But yeah, I would not be surprised if we didn't gap down to 100 over earnings.
Awesome. Thank you very much. Lisa over on YouTube is asking if we can take a look at SoFi, SOFI.
Yeah, I happen to know that symbol too.
I'm pretty sure you know them all, Jeff.
Not all of them. Not all of them. Let's see if we can get some. Nope, we don't have any data. All right. Now, SoFi, this is a stock. Actually, I looked at SoFi here recently. You can see that the stock is, I pulled in lots of data here so you could kind of see that this stock was once a $25 stock and is now not. Okay, so two thoughts here. Number one, the stock is in a bearish kind of channel here. Okay, that's should be pretty easy to kind of see. You can just put up a couple of trend lines here, and the stock is, there's your range right now. When a stock goes through this and it gets down to the single dollars, like 7 or 8, I know a lot of people like to bottom fish. And your argument is, oh, look at this, it was trading at 5 and then went to it. Look at it, it doubled in value in a week. Well, it went from 5 to 10. Okay, stocks are priced at their level for a reason. Okay, this is a $7 stock for a reason. All right, that is where buyers and sellers are agreeing this is the value of this stock. Okay, its fundamentals can tell you whatever they want to tell you. Its outlook could be rosy as roses are red. It doesn't matter. If buyers and sellers say this is a $7.42 stock, guess what? It's a $7.42 stock. And right now, it's in a bearish downtrend. I don't know. I thought they just had earnings. I saw them popping up here. Yeah, they just had earnings on October 30th. And as you can see, it really was a non-event. The stock moved very little around earnings. That was that big red candle right there was their earnings announcement. Okay, a couple days later, it kind of gapped up, challenged the top of the channel, but yeah, I don't know if you were looking for maybe some bullish comments, but there are none technically here on SoFi.
Thanks very much, Jeff. We've got a few minutes left, so we might try and take another one. Larry was asking if you take a look at, I think it's PI, just a little bit hard to tell. Yeah, that's it.
I've heard Rob talking about this. I think we've looked at this before. Okay, so I'm not familiar with this company at all. Couldn't tell you what they did, but I can tell you what their chart's telling me. Let me pull up some Heiken Ashid bars. Okay, so we have this little rally going on. I think the rally's starting to get tapped out because we're at some this is what I would call an intermediate pivot point. This is intermediate pivot point back here. And we got this little wiki candle that has developed. I wouldn't be surprised if we get another wiki candle. Each of these candles takes 2 days to make. Okay, that's part of Heiken Ashid. That's part of the name. It's 2 days is buried in there. And so I would not be surprised if we get another candle that is very wicky, has wicks on the tops and the bottoms, and maybe not surprised if that turns red again. But again, could be wrong. Is this the bottom? I don't know. If you are bullish, guess what? You're in luck, because here is your line in the sand. And if we close, okay, if we close with confidence, get my little bar going here. If I could get it to, if I could draw a little bar, I was going to draw 2 little bars here. If we get that close above our resistance here, you're looking at $90 to the upside very easily. That is your and so here's the thing. This is what's great. You could be early and put on a bearish trade right now. And where is your stop? Your stop would be like right up here. Okay, maybe just a little bit higher. at some odd number, like 70.77. How about that? Some really odd number. Go early on your bearish trade, and if it fails and it crosses above your stop up here at your odd number, maybe like 70.73, it's a very odd number, then you go bullish, your target is 90. How about that? So you could go early bearish right now, and if it moves against you, then immediately go bullish with a target of 90.
Jeff, thank you very much. We're at time, so really just appreciate you stepping in for Rob. And I thought it was a great session. Thanks for those guides. I'll just mention that there's a couple of people who have pointed out that they're having some problem getting the guide. So for everybody that was in Zoom, I've got a message, a link, and I can also send an email to you. If there's anybody who had trouble getting the guide and they are on one of the other platforms, please go ahead and just email support@ewotrader.com, and we'll make sure to get that guide out to you, or both of those guides. Jeff, any final words from you?
No, just remember, one is the income guide and the other is a straddle or breakout guide. Just remember them by those names. I appreciate the questions on the stocks. Hopefully you gain some direction from my analysis on those. And thanks for tolerating me tonight. Rob will be back, okay? But it was nice to jump in here, and we will update you on, if you're not familiar with calendar spreads, then just track that WMB trade. Just see if it goes sideways, and that's all we're kind of looking for there. So with that, I appreciate it. Hope everyone has a great night.
Awesome. Thanks, Jeff. Thank you, everybody. Take care. And Rob will be back next week, and we'll speak with you then. Thank